Hey, what's up YouTube? This is Foxtail Digital coming to you again with Black Girl Stocks. And this is another segment of our top 3 option plays this week, where we're just gonna go over a few different trades, stock fundamentals, and different strategies that you can do to make it through, okay? If this is your first time watching this video, please click that thumbs up button for me. Also subscribe and click that notification bell so that you get notified anytime I upload a new video for you guys. So let's just go over last week's plays. So the first stock that we were looking into trading options on was EGO, and when we were looking at this, it was trading around $11.46. So this was a bullish position, and you can kind of see we definitely hit our high here when the stock reached about $11.08 last week. So that was on last Tuesday, and our target for this was $12. So essentially this was a very short-term trade. And the option contract that we were looking at was the March 18th call, the $12 call. So it was around 25 cents at that time. And you'll see that it did reach its maximum profit around Tuesday when it moved up to 0.40. The next stock was a bullish play on CYXT. This was another bullish trade. When we were looking at it, it was $11.63. And you'll see on this one, we got most of our profits on Thursday when we reached this high of $12.37. And looking at the actual option contract, we were looking at the April 14th, $12.5 call. And this one didn't move much. When we were looking at it, it was about 0.85 for the premium, and it really hasn't done too much since that. So this definitely wasn't one of our best trades, but one thing I do like is that we like to use entry signals. So our entry was around $12.45. We did not pass that, so this would not have been the best trade to enter, okay? The last stock was our bearish call credit spread on Oxy. When we were looking at this, it was trading around $55.44, and we would be profitable in this call credit spread as long as the stock stayed below $50 by the April 14th expiration date. Now you'll see with everything that's going on overseas that gas, oil, and other natural resources have been booming. So this was a very short-term position, and you'll kind of see we got a lot of profits here on Wednesday when we moved down to $50. So that may have been a good time for that call credit spread to lose value, and you can buy back in for a lower premium and just keep the difference between that and the credit that you received to open that call credit spread. So that's just kind of something that you can do with these type of trades. And it does look like it could continue on that strong uptrend that it's been in since its earnings. So hey, short-term trades, get those profits, and that's that for Oxy. Okay, so let's get into this week's trades. So the first stock that I want to talk about is LHX, and right now it's trading at $250. Now this is going to be a bullish position just based off of the strong uptrend that we've been in since their earnings that they had back on January 31st. So they had a slight earnings win, slight earnings beat. Now one thing I do like about this is the MACD indicator. Just looking at the MACD indicator, it looks like it could possibly have a bearish crossover of the blue MACD line over the signal. Then looking down at the RSI indicator, we have passed below the 30, and it looks like it could move back up and continue in that uptrend after a slight correction after hitting that high of $279. Now just look at the average volume, the daily average volume. It was a little bit higher today. Normally it would be 1.8 million, but today it was 1.9, so that's a good sign for that. So right now you'll see that we have dropped right down to the 50-day moving average, and we just kind of want to see if it uses that as support and bounces off of that. So if I was going to have an entry for a bullish position, I would want to see it move past $253. So that's a little bit more than what we have right now, and because that is previous resistance points that we've had over the past couple of days. So seeing the stock move past those prices would definitely be a good indication that we are moving upwards. Our MACD indicator is moving above the center line, so that's a good bullish signal. The RSI is kind of reaching overbought on this time frame, but now looking at the option contracts, you can kind of see our implied volatility. It's pretty neutral around 50. And I want to move out a little bit. I would want to look for the April 14th expiration calls. Okay, so moving into Webull, and even just kind of looking at this stock chart, this isn't necessarily a doji candle, but you can kind of see some slowing down in that downtrend. So I really want to see, are we going to continue on the strong uptrend that we were in? So make sure that you're in the calls, and we're going to go to the April 14th, and this is going to be the 280 call. Now, one thing about this, our bid and our ask is a little bit wide for this, but you know, with this one, the most that you would lose with this position is going to be $230, and the maximum is going to be unlimited. Oops. So that's kind of something that I would want to see for this getting into a bullish position. See the stock move past $253. So that's something that you can do for that. Next is going to be GM. So this is General Motors, and right now it's trading at $40.83. Now this is going to be a bearish position, and I know that you can see from the stock chart overall over the last 180 days, it's been somewhat neutral, you know, trading below the 50-day moving average for a good majority of it. Then we moved above the 50-day moving average, and right now we are in a position where we've been below the 50 and 200-day moving averages for a while. And we did kind of just have a move up to this white 50-day moving average. So in a downtrend, that's something that we can, you know, look for to continuing that trend. Now, looking at the RSI indicator, you can kind of see we've had some peak around 50, and we're kind of starting to move back downwards into that trend. We do have some support here around $39, so it's a possibility that we could bounce off of that and move upwards. But just looking at the MACD indicator, it looks like we could have another bearish crossover with our blue signal. RSI is low, so that's just kind of something that I would want to look for a bearish position. And then just kind of looking at the daily average volume. Normally we would have about 20 million on the day, but today we had 18, so it's a little bit slow. Now, just moving a little bit closer, if I was going to have an entry for a bearish position, I would have my entry set around $40.50 to $39. So if I saw that stock move below that point, and you'll see we've had some support around that area, then that would be a good indication that it's boom, bounce back up. Boom, 40, bounce back up. So that's what we've seen repeatedly. And then with the higher volume, you know, it could continue in that downtrending pattern. Now, looking at the options, the puts here, they're a little bit expensive. So, you know, you're looking at 500 to 900, 1,000, 5,000 and up for these positions. So for this one, I would want to do either a long put or a debit spread. First, I'm going to look at the puts, make sure you're in the puts. And for this one, I'm going to do the April 14th $40 strike price, and you'll see here it's about $222 for the premium. The volume's pretty decent. Our delta is cute, theta is low, so this is something that I would want to look for long positions. Now, our bid and our ask is, you know, it's pretty close here, 2.13 to 2.18, not bad. So this is definitely something that I would want to get into if I saw the price move to that entry position. And of course, your maximum loss is going to be 218. And then with puts, it's theoretical. If the stock dropped to zero, your maximum profit would be almost $4,000. So that's something that you can do for that. Now, going into the put debit spreads, which is also going to be a bearish position, make sure you're set to vertical. And on this one, I'm still going to keep the same expiration date. And we're going to sell the 35 strike price and buy the 40. So if you're in Webull, this one is going to be about a 5.0 spread width. So that's going to show you this particular debit spread. And it's going to let you know that you're in a debit spread right here when you look down at the bottom. And our maximum profit is going to be about 357. Maximum loss is 143. So that's not terrible. That's something that you can do for that. And lastly is going to be SPY. This is one of our favorite ETFs. This is S&P 500. Right now it's trading at $417. So this is going to be a bearish position, and just kind of looking at the stock chart, similar to the last stock that we were looking at, you can see that we've been in a strong downtrend, and the stock has been using our 50 and our 200-day moving average as a form of resistance. So it'll move up, bounce off of that, and continue in that downward trend. And also you can kind of see a falling wedge starting to form. And anytime you see something forming like this, the next big move is generally going to be with the overall trend. So we've been in a strong downtrend, and I would, you know, just kind of anticipate the stock continuing in that trend and moving downward. Now, one thing that's interesting is we have seen some support around $413. So that's somewhat, you know, we have a little bit left to drop. So I just want to see, you know, reaching these positions. Is it going to continue in that trend? Just looking at the the actual volume, you see on average we get around 103 million, and today we had 95 million. So it was a little bit light on Monday. So for me, if I was going to get into a bearish position, I would have my entry set around $415. So once I see SPY drop below that price, I would get into that bearish position. Now, looking at the actual options, the implied volatility is very low for this, so that's, you know, not something that we're worried about. So the implied volatility is amazing. You can honestly do a put for this, or you can do the call credit spread. I just feel like the call credit spread is going to be safer for these ETFs. Now, if I was going to do something on this, make sure that you are in the calls and make sure you're on vertical for the call credit spread. So on this one, we're going to sell the 435 and buy the 436. Now this one does have a very large open interest and volume. That's kind of something that you'd like to see. Now for the call credit spread, just make sure that you press sell first, and it's going to show you which one that we're going to sell, which one that we're going to buy. And on this one, the maximum profit is going to be $30 and the maximum loss is $70. So, you know, that's not too bad. That's something that we can do. And just kind of looking at how the overall market has been moving the past few days, it does look like that's something that could definitely happen. Closing below 435. So that's something that I would want to see for that. All right, you guys, and that is going to be it for this video. So make sure that you click that thumbs up button for me, and also check out this video that I posted on the reasons why I'm no longer using Robinhood. So you're not going to see me posting on Robinhood. I give you 8 reasons why, and yeah, make sure you check that video out, and I'll catch you guys on the next one. All right, bye.